Hello, and a very warm welcome to you on our latest Thomas Westcott webinar. My name is Patrick Tigwell. I'm a general practice partner with the firm at their Exeter and Tiverton offices. And again, it's my pleasure to be your host for this afternoon's webinar. Given the title of the webinar this afternoon, which is the reverse charge in the construction industry for VAT, apologies, I should be wearing a hard hat and high-vis jacket. But instead, I'm still looking like a snooker player with the three-piece, so you're kind of everything. So what's the plan for today? Well, as I say, it's on the reverse charge, which is theoretically anyway coming in 1st of March next year for the construction industry, and it's obviously a specialist area, but one that you do need to be aware of. For our speakers this afternoon, I'm delighted to welcome my two VAT colleagues. I've got to be careful how I say that. That is VAT. Annette and Sean. Annette and Sean operate out of our Plymouth office, but despite that, they're really quite nice. And they provide the, I'm going to pay for these later, and they provide our clients with expert sort of VAT advice across all offices. Sean actually has a side hustle. He does our furlough calculations or helps with that. So any furlough claims from yesterday's webinar, please direct to him. He'll thank me for that as well. What we'll do in a minute, we'll start off with Annette and her presentation. Then it will just flow through with Sean, after which time we'll have an opportunity for questions, and then we can wrap things up. It will probably be about 45 minutes, I suspect. With questions, if you haven't had a chance to ask a question yet, you still can. Where is it? The Q&A button down there. Please ask them as they go, as we go along, and then I can ask the guys at the end of their presentation. Should we get to the end of the webinar and you still want to ask a question, you still can at events@thomaswestcott.co.uk. I would also like to thank Elisa Freeman. She's a part of our marketing team that organises these webinars. She's also, so thank you to you, Elisa. She's also recording it, and she'll send out a copy of that recording to all our, you, our lovely attendees. So I think without further ado, we'll pass to Annette. She has warned actually before this morning that her section is a bit on the dry side. But don't worry, keep going because Sean's is more interesting. So with that, and with sort of Red Bull on standby, I'll pass over to Annette. Annette, what a build-up.
Well, thank you very much, Patrick, and good afternoon, everybody. And please don't turn off during my bit, because obviously it is important that I explain the VAT rules before we move on to the more practical aspects. But the domestic reverse charge, well, it's been a long time coming, hasn't it? It's been postponed for almost 18 months. So of course, the construction industry should be prepared. Well, are they? By sheer coincidence, I just happened to be out walking my dog first thing this morning, went past a local development site, and I saw a builder coming towards me, and I thought, I've got to stop, I've got to ask the question. Socially distanced, of course, as I say, and I said to the builder, oh, do you mind if I just ask you a question? It's with regards to this new VAT domestic reverse charge that's being introduced in March. Have you actually heard about it? And do you mind if I ask, are you VAT registered? Because it really will affect you. Well, the look of shock and horror on his face, I think he was surprised to be accosted by me walking my dog and asking him questions about VAT out of the blue, but he said honestly he really did not have a clue and he had not heard about this. So I then proceeded to explain what it was and how it may affect him, but obviously that's a real concern if a subcontractor a few months before it's about to go live has not had any discussions with the contractor about what's going to be happening with their invoices and how it's going to affect his pocket. So we're here to talk to you about when, how, and to whom it applies. So it is essentially the mechanism where the business who's making payment for construction services, so the contractor essentially who becomes responsible for self-accounting, so that's reporting and payment of the VAT. It adds yet another onerous task onto the contractor of all of those administrative requirements which are part and parcel of the construction industry. So this is in addition to the monthly CIS returns, the verification procedures, the CIS statements, ensuring that CIS is deducted correctly. So now here's another load of new requirements for you. These requirements include change of accounting systems, different VAT return entries, which Sean is going to explain in the second part of this presentation. It really is a change in the way that VAT will be collected and accounting for in the building and construction industry. So here's the essential bit straight from the VAT legislation. Please don't turn off, because it's important to identify that first of all, this reverse charge will only apply to construction operations which are reported under CIS. If you look at your building contracts, you should be identifying what work you're going to be involved in post the 1st of March 2021 in terms of whether this will apply or will not apply, and make sure that everyone who is involved in that contract is fully aware of how it's going to affect them. So CIS construction operations as defined by the Finance Act is when you're carrying out work to the fabric of the building or part of a building being converted. And it's important to talk about new buildings, new commercial buildings and converted buildings. And the reason I say that is because we're going to be looking at the various rates of VAT to which this reverse charge applies. Now, it excludes the fittings of any goods that are not building materials. So if we look at it as it's essentially something substantial which is part of the building process. Not only the building itself, but those works which are carried out within the immediate site of the building. So the legislation lists there examples of when CIS construction applies. In addition, we have to look at including works of repair. Now, it's important to note that works of repair are covered whilst the building is taking place. But once that building has been completed, of course, then repair works fall outside of the CIS rules. So I've got a few examples of areas that are not construction operations, but of course this list is not exhaustive. So we've spoken about installation of goods that are not material, building materials. So a couple of examples there would be carpets and fitted bedroom furniture, hire of goods. One to say about landscaping is that if it's routine landscaping, it doesn't fall into CIS. But of course, if it is part of the building project itself, then it will fall into the CIS scheme. But there's always going to be those anomalies within all of this. If we look at professional services, the provision of professional services, such as those provided by architects, surveyors and consultants, are not within the CIS scheme. However, site project management, so a professional who is providing direction on site, will fall within the CIS rules and ultimately will fall within this reverse charge mechanism. And then there's a couple of examples there of installation within buildings that do not fall within the CIS operations. So these regulations come into force from the 1st of March 2021. And as I said, it's a change for the way in which VAT is accounted for in some transactions within the construction industry. And unlike CIS, it doesn't just apply to construction services, so not just to labour only bills, but this reverse charge also applies to goods and services. So when they are provided together, it applies to both. Just briefly touched on the fact that we're going to be looking at 5% and 20% rate of VAT, because the reverse charge does apply to those, but the reverse charge does not apply to zero rated VAT, and we'll come on to some examples of those as well. I'm also going to show you an example of when a building project, depending on what part of the chain you are in the construction industry, may have different rates of VAT. So you might be working on a zero rated project as the end user, let's say, but still have to operate the reverse charge. So the domestic reverse charge are closely aligned to those defined as construction operations under CIS, but obviously, as these are VAT rules, there are those additional extra things to consider. Now, why are these new regulations coming into play? Well, HMRC have a huge problem with missing trader VAT fraud. So now they've automatically enlisted the services of contractors to help them solve that problem, because what they are saying is, well, historically, we've had an issue with subcontractors applying for VAT registration, issuing VAT invoices and being paid the VAT, but somehow that VAT has not found its way to HMRC, and unfortunately those VAT registered traders have then gone missing. So there's this huge black hole, and HMRC wanted to introduce legislation so that they could get a bit of assistance within the construction industry itself in ensuring that that VAT would be paid across to them. So we're going to have a look at the current rules. So this is how it would happen at the moment in this example, with transport company doing particularly well, decide that they'd like to have a new office built. So a contract is made with a local building company, and the building company have engaged the services of subcontractors in order to fulfill that project. Now, in the current legislation, those subcontractors, if they're VAT registered, would issue the invoices to the building company, adding on standard rated VAT. The building company would then issue the invoice to the transport company, who are the end user, and I've identified them as the end user for a reason which we will explain. And they will also issue their invoice with standard rated VAT. So what happens post 1st of March 2021? So in this scenario, the subcontractors, they will not be charging VAT on their invoices. The building company, however, will still account for the VAT that would have been charged to them at standard rate to HMRC. So the building company will have to account for the VAT and pay across the VAT. The subcontractors then are applying the new VAT reverse charge rules. They will not be charging the VAT to the contractor, but the building company will be accounting for the VAT direct to HMRC for the services which they have purchased from the subcontractors. And the building company will be paying that VAT across and also claiming it as input VAT in the same period. Now, the transport company have advised the building company that they are the end user. The transport company will not be passing on any of those services to another entity. Now, because the transport company are the end user, the building company, when they come to issue their invoice, will not apply the reverse charge rules and will invoice in the normal way with standard rated VAT applied. So let's go on to another example where we have a zero rated end user, because after all, we have said that the reverse charge only applies if it's a standard rated or reduced 5% rated supply. Now, as we know, if you are working on a zero rated project, the rules say that it is only the contractor, once they've been issued with a certificate of use, to confirm that the end user is able to benefit from zero rate. So I've used a nursing home group in this example. The subcontractors themselves should still be charging standard rated VAT. So in this example, we still have the reverse charge at the beginning of the building chain, because the subcontractors should be applying ordinarily standard rated VAT to the building company, and it is the building company whose onwards supply would be at zero rate. So reverse charge mechanism does still operate in this case. The subcontractors would not be charging VAT to the building company. The building company would be accounting for the VAT and paying the VAT across to HMRC. But obviously, when they come to issue their invoice, it will be at zero rate because they have the certificate of use from the nursing home group to do so. The nursing home group are still deemed to be the end user in this case. So we're now looking at what is a 5% supply. So a 5% VAT supply is used in the following circumstances. So it's when you have a commercial building which is being converted to a residential. It's when you have a single dwelling that is being converted into a different number of dwellings, or you have building work on a dwelling that's been empty for the last 2 years. Now, it's very important when you are dealing with reduced rate VAT that you must have evidence that that property has been empty for the last 2 years, and that's normally from property officer at the local council, for example. So building work on a qualifying conversion, reduced rate VAT, building materials and certain goods incorporated into the building at reduced rate VAT. If this applies to the work that you are doing, then the reverse charge will apply after the 1st of March 2021. So if we were to go back to our first example of a standard rated supply within the reverse charge rules, then obviously the subcontractors would still not be charging that VAT. The building company would be accounting for VAT at the appropriate rate on a conversion at 5% to HMRC. And then once the end user had been identified they would be invoicing the end user at the 5% rate of VAT. So we've covered when it should apply for a standard rated build, a reduced rated build, and where we've had a combination of 0 rated, however, the reverse charge still applying for the subcontractor. 0 rated house construction, so new builds, buildings for charities, buildings of student accommodation and residential homes. These are the 0 rated supplies where the reverse charge does not apply. So when you look at your building projects, if you have these, the reverse charge does not fall into play. So what's the impact of the reverse charge? Well, the contractor, so the building company in our example, will have to pay the VAT to HMRC on behalf of the subcontractor. The building company will make an adjustment of its own VAT return instead of paying the VAT to the supplier of the services and goods. The building company makes the claim of input VAT on its own VAT return and will charge VAT in the usual way and at the applicable rate, whether that be 20% or 5% or 0 rate to the end user. And examples of all of these, Sean's going to be coming on to in the practical parts of our presentation. But what steps to take now? Well, I've mentioned contracts a few times. Anyone in the construction industry should be making preparation for the reverse charge to take effect. They should all be talking to each other at any parts of that supply chain. Contracts need to be reviewed with subcontractors to see if the reverse charge will apply on the services that they receive. They should be pre-warned. The builder I spoke to today, he should know about this because it is going to significantly affect him. And decisions need to be made by the subcontractors as to what they need to do to prepare for this. Cash flow is going to be affected. That's a big issue. Subcontractors should consider switching to monthly VAT returns to obtain refunds from inputs quicker in order to compensate for this loss of cash. Cash accounting and the flat rate supply scheme cannot be accounted for under the reverse charge procedures. So it's all of these things. It's not going to happen overnight. If people are not ready now, they really should be taking these steps before the 1st of March 2021. Now, we've spoken about end users, and end users do have their part to play in the reverse charge mechanism. So although the reverse charge does not apply to consumers or end users, so that is to say the contractor will still render them with a normal VAT invoice, it is important that they understand the reverse charge rules and they understand that they also have responsibilities as a result of this new legislation. So if you're carrying out work on a domestic property on behalf of the owner is the end user and the reverse charge does not apply, invoicing in the normal way. If you're working directly on premises owned by a contractor and the contractor is the end user, the reverse charge does not apply and invoice in the normal way. If you're working on site under instruction of a main contractor, the main contractor will not be the end user, as in my examples, and therefore the subcontractor needs to operate the reverse charge. So they need to know that their main contractor is not an end user, and so they are obligated to implement these rules. The end user is an end user because they are using construction services for themselves. They do not sell on those services, because once they sell on those services, they are part of the reverse charge chain and they would have to operate the scheme. So the end user, for example, will be a business that does not supply onward construction services, such as a supermarket. They can either be VAT registered or exempt businesses, and also registered for CIS, but they must ensure that the suppliers do not apply the reverse charge. It is their responsibility to identify themselves as an end user. And HMRC have actually said that it is the onus is on an end user to notify the contractor, whether that is by letter, by email. It must be documented, because if the contractor does not have something to confirm that they are dealing with an end user, they are obligated to apply the reverse charge, and HMRC will want to know why they have not done so. Now, a lot of construction work, of course, is carried out for local authorities and public bodies. Now, local authorities and public bodies benefit from the end user exclusion in most cases. So that's to say that works carried out on behalf of government departments, council, NHS bodies, the police and fire and rescue services will be invoiced in the normal way. So before we move on to the practical aspects, and I really hope I haven't sent you to sleep, because it's very important, and I know I've whizzed through this, but it is very important to understand when and when the reverse charge does not apply. There is a flow chart, and we need to become very familiar with this, because we need to be asking ourselves the question on all of these contracts that we should be reviewing and speaking to the subcontractors and the end users to make sure that everyone agree. So the first question is, are any of the supplies you're making within the scope of CIS? If they're not within the scope of CIS, we can stop right there with looking at a particular project, because the normal VAT rules will apply. We then need to look at what type of supply it is. Is it standard rated? Is it reduced rated? Is it zero or exempt? Now, if it's standard or reduced rated, then yes, we should consider the domestic reverse charge. If we know that we are supplying our services direct to zero or exempt cases, then the normal VAT rules apply. But please beware, and that's why I incorporated the slide where the subcontractor could ultimately be working on a zero rated project, but the reverse charge still applies because you have the contractor in between. The next thing you've got to ask is your customer VAT registered? Because if that customer is not VAT registered, so for example, this is a domestic supply, then the reverse charge does not apply, and you invoice in the normal way with VAT applied. Will your payment be reported under CIS? Because if it's not, the normal VAT rules apply. Has your customer provided confirmation that it is an end user? And I'll repeat what I said previously, that the end user has to identify themselves. If they don't identify themselves as an end user, then the domestic reverse charge has to be applied. If they have confirmed that they are an end user, then of course the normal VAT rules apply. So that's a summary that we really need to be using as we go through our projects. And we need to be very clear on when this domestic reverse charge will or not apply, and to whom it applies. So I thank you very much for listening to that part of the presentation. And now we're going to come on to the interesting side of things, because Sean is going to talk you through the practical aspects of invoicing the reverse charge, for example.
Yes, thank you, Annette. I hope you all listened intently, because we've got your email addresses and Annette is going to send out a quiz at the end of this. We'll see how well you were listening. But yeah, thank you, Annette. That's the legislation side sorted, and hopefully we're now a little bit more aware of the rules, how you fit into the supply chain. And I kind of want to talk to you about what this means for you and the practical issues arising from the implementation of the domestic reverse charge. So we know you've been caught by the domestic reverse charge. We're going to be raising invoices and receiving invoices. And I also want to talk to you about what's going to change, what your invoices need to contain, etc., etc. So before you get to raise an invoice, obviously you need to have a conversation with your contractor, or if you're the contractor, with your subcontractors, and just check off a couple of things. You need to make sure that you're both VAT registered, you're both CIS registered, and that the services are going to fall within the scope of CIS. Now, those services that do fall within the CIS scheme, the subcontractor invoicing, no VAT is calculated on the net charge to your customer. So no VAT is calculated on the net charge to the contractor. The VAT is, however, still detailed on the invoice, but it's your customer's responsibility to account for the VAT on your behalf. Now, the amount of VAT due, or the VAT rate, should clearly be shown on the invoice, but it should not be included in the balance of the invoice payable to you. On the reverse, if you receive an invoice for payment that mentions the domestic reverse charge, the output tax must be accounted for as VAT due on sales, but you can also account for the input VAT and reclaim that in your usual way. Now that is very wordy, so to help us with this, I have produced a little sales invoice, and I'm going to talk to you about what needs to be contained within these invoices. So to the left of the screen, you can see there's a regular sales invoice. All invoices raised under the domestic reverse charge now must contain your customer's VAT number. Now, we all know VAT invoices should contain your VAT number, but you should also include your customer's VAT number now. It should also have the rate of VAT that you're charging. On this particular example, you can see 20% reverse charge construction, but as Annette said, could be 5%, could be 20%, depending on the services that you're providing. There also needs to be a statement detailed on the invoice that the invoice is raised under the domestic reverse charge scheme. HMRC have provided some prescribed wording. Obviously, contact your local TW office and we can give you that wording. Essentially, you have to refer to the VAT Act 94, section 55A. So long as you've got somewhere as to that effect on your sales invoice, you're complying with the rules. If we drill down into this invoice a little bit closer, and we look at the subtotal, the VAT total, the total and the balance due figures, you'll notice this invoice has been prepared on the basis of a £1,000 net sale. You'll notice that the VAT element says VAT total zero, balance due £1,000. Now, that is, so you will only receive the net amount of the invoice, obviously less the CIS tax if applicable, and your customer is going to account for the VAT on your behalf. So we've raised this invoice. Let's now talk about how this is going to affect your cash flow. So I've prepared another example. The box on the left is the historic way that we would have raised the invoice. So again, £1,000 for the work done. Your output tax on that is £200. The gross invoice would have been £1,200. Previously, your invoices would have been paid net of CIS, but gross of VAT. So £1,000 for the work done, less your CIS tax, obviously £200, 20%, that's paid to the revenue on your behalf, plus your output tax, your VAT at £200, you would have received £1,000 for that invoice. All well and good. Now, however, with the reverse charge, you'll no longer be charging the output VAT, so you will no longer receive that element in the invoice. So you'll still be invoicing £1,000 for your work done. You'll still have your CIS deduction of 20%, £200. That's again paid to the revenue on your behalf. But because you've got no output tax charged, you're actually only going to receive £800 for that once was £1,200 invoice. Therefore, you can see how this is going to impact the cash flow for subcontractors in the first few months of this scheme becoming operational. It should all come out in the wash by the time we get to the first VAT return, but depending on where their VAT quarters fall, obviously there's going to be 3 months of them receiving less than what they're used to, but subsequently they don't have to pay over the output tax because they've never received that output tax when it comes to doing their VAT return. If all of your work is caught by the domestic reverse charge, it's quite likely that your VAT return will end up being in a repayment position. But again, you're going to have to wait a little while for that refund to actually become payable to you. Before I move on to the VAT returns, I just want to cover over another couple of points. Annette touched on the CIS earlier. If you've got an invoice that is mixed supplies, so with CIS, if you charge for labour and materials on the same invoice, your labour would be subject to CIS deductions, but the materials element would always get paid to you as the figure on the return. It wasn't subject to a deduction. For the domestic reverse charge, there will be no apportionment or split of the supply. So the domestic reverse charge will cover the entire VAT element of the invoice. And again, deemed contractors, if you are a contractor who is exempt from reporting through CIS, the domestic reverse charge does not apply. You just need to let your suppliers know this so that they can invoice you in the normal way and you're going to receive your output tax. So that's what it means. That's what it means for your cash flow. That's what your sales invoices need to look at. So now I'm going to move on and let's have a look at the VAT returns. So if your sales invoices are caught by the domestic reverse charge, as a subcontractor, those supplying their goods and services for onward supply, the preparation of the VAT return is actually pretty simple. So I'm using the £1,000 net sale as the example again. This will go into box 6 of the VAT return, as it always has done, but you will notice in box 1, where you would normally have your £200 output tax, there's no figure to go in there because your customer is accounting for your output tax on your behalf. So pretty straightforward for a subcontractor's point of view. However, if you're the contractor or if you're receiving invoices subject to the reverse charge, you are expected to account for the VAT on behalf of your suppliers or subcontractors. So you've only paid them the net amount of the invoice. So you've physically paid that £1,000 invoice and you've only paid £1,000, albeit £200 CIS, to your subcontractor, your supplier. Now you have to account for the output tax on their behalf. So you're going to put £200 into your box 1 figure, which relates to their output tax. But because this is a purchase for you, you equally reclaim via your box 4, £200, net effect being that there's nothing actually payable or receivable from HMRC for that invoice. And then you enter the £1,000 net sale into your box 7 figure total purchases. So it's a little bit more tricky if you're going to be the contractor and you're receiving the invoices. And yeah, I think there's going to be a couple of problems with people being able to get this into their softwares correctly. So that's the main bulk of the compliance covered off. There's a couple of things that I just want to run through, the practical aspects of what you can do now. So if you are flat rate for VAT, please, please, please contact HMRC and remove yourself from this scheme. If your flat rate for VAT, you pay a flat percentage on the proceeds received from your sales invoices to HMRC, and you don't claim any inputs on your purchases, save for any capital items. Because you will no longer be charging the output tax, the flat rate will still apply to your net sale. So you'll be applying that percentage to work done and not to a proportionate amount of the output tax that was charged. So it's actually going to cost you as a flat rate trader to remain on the flat rate scheme and be caught by the domestic reverse charge. So please, at the very least, remove yourself from that scheme as of the 1st of March. If you're cash accounting for VAT, and where you're cash accounting for VAT, you only pay the output tax on your sales to HMRC once those invoices are paid. And likewise, you only reclaim the input VAT once you've physically paid for those purchases. Now, because you're no longer charging any output on your sales invoices, it might be better for you to move on to the standard VAT accounting scheme, whereby you can claim your inputs for your purchases a lot sooner. So again, this is going to help negate the problems with your cash flow. If you aren't already and you're eligible to, please apply for gross status for CIS tax. Being paid gross for CIS will mean that although you're not receiving the output element of your invoices, you will no longer be subject to a CIS deduction, so your cash flow will remain the same. Just word of caution, that amount that's normally deducted from you is normally paid to HMRC on your behalf. So when it comes to tax return time, you're not going to have that little pot of money sat at HMRC to pay your tax bill. So just keep that in mind if you do go gross status. And if all of your work is going to be caught by the domestic reverse charge scheme, consider changing to monthly VAT returns. This will enable you to reclaim the input tax on your purchases a lot sooner, albeit there's more administration to be done, but the benefit of that may outweigh the administration. One final point that I haven't put on the slide, if you're voluntarily registered for VAT, you might just want to deregister. And this pushes that entire headache elsewhere. Just something to consider. Obviously, you won't be able to claim your input tax on your purchases, but if that amount's minimal, then there's not a great deal to worry about there. That's me, and that's all the points that I wanted to cover off. We're now going to pass over to Patrick for the questions, and hopefully we'll be able to give you some answers. Patrick, you're still on mute. Rookie error. There it is.
Yeah, you think I'd have learned by now. Yeah, Sean, if you could stop sharing your screen there.
Absolutely.
Right. Thanks for that. And yeah, apologies to Annette, really. Actually, it was a lot more interesting than I thought it would be. So, and I didn't fall asleep hardly at all. So, yeah, a couple of great presentations there. We have actually had a few questions come in. So if I can run through these, and guys, either one of you sort of jump in as appropriate. From Karen, does VAT exclusion, I'm thinking she's meaning there, mean snagging once the contract is completed? What are your views on that?
With snagging, we have to go back to the fundamental principles. Does CIS apply to the work that you're doing? And with snagging, you still have to look at to whom you are contracted to do that work. So presumably you would still be working for perhaps a housing association, house build company. I think it would be good if perhaps you could email me with some more details about for whom you're providing the work and what the services are, because it's very difficult to just give a blanket one-size-fits-all answer without knowing the various parts of the chain and what the work is that you're carrying out. So please do send it to the email address, and we can have a look at that for you.
Yeah, thanks, Annette. And moving on, actually, Rachel, she's one of my clients. So hi, Rachel. She's saying we act as both subcontractor and employ subcontractors ourselves. She's saying we're exempt from CIS ourselves when we act as a subby, but we do have to deduct CIS when we employ a subcontractor. So obviously you've talked about the interaction with CIS. But how would the rules apply in those situations when obviously, you know, they're the subby and then they're the contractor?
Yeah, absolutely. So if we go back to the flow chart, if it's a CIS operation and payment of CIS is being applied, then the reverse charge absolutely does apply. So in your example, you could definitely see that your subcontractors from whom you're making deduction of CIS, they will have to operate the reverse charge. So the reverse charge mechanism is going to come into play with yourselves.
Okay. And a question I was going to ask, actually, asked by Catherine here, it's about really, well, how do we know at this point how the software is going to cope with this, you know, Xero and QuickBooks? And Catherine's particular question, if she prepares, Sean, maybe you can come in with this, you know, your £1,000 example, would you put £800 as the net figure on your invoice? But if you've had CIS deducted from your net figure as well, what goes on where, and do you think software will cope with it all?
Yeah, well, we'll talk about software first. The software houses have had plenty of warning of this scheme coming in because it has been twice delayed. And I know QuickBooks has already set up a code within the software, and it's 20% RCSG, which is reverse charge services and goods, which will ensure it populates the boxes in your invoice and in your VAT return correctly. The question that Catherine's asking about using the £1,000 example, which you put £800 as a net figure on your invoice. Now the £1,000 is still going to be the work done, so that needs to count as your sales. You will only receive £800 of that, but £200 of that is being paid to the revenue on your behalf. So you are in effect still receiving the £1,000, albeit £800 to your bank account, £200 to HMRC to help pay your tax bill.
Yeah, thanks then, Sean. I think that clears that up very nicely. Another point Catherine did raise, though, is well, what happens if you know, obviously the subby is saying to the contractor, well, you pay the VAT on my behalf. But what if the contractor doesn't pay? Do we know who's legally responsible for that? I presume it's the contractor in this case, is it? It is,
because it has been entered onto their VAT return. And again, if I go back to what I was saying earlier, HMRC are engaging the services of contractors, not voluntarily. They are imposing this so that the contractors deal with the reporting of the VAT and the payment of the VAT. So once that VAT return has been submitted, obviously HMRC are aware that it's the contractor who will be making that payment.
Okay. And if they don't put it on their VAT return, then obviously they are liable in that case as well, aren't they? Because obviously it's their responsibility, as you've just said, to put that VAT on their return. So there's no kind of, I suppose what Catherine is saying, there's no comeback on the subby in that case. Their you know, duties have been discharged, haven't they?
I think so, because the subby, in essence, as long you've raised your invoice to your contractor, you put your contractor's VAT number,
yeah,
invoice. So you're saying this VAT number, this contractor, they're accounting for that output tax on my behalf.
Yeah.
That's as much as the subby can do. If the contractor chooses not to do it, and HMRC investigate, they'll be able to see that the subcontractor has complied with the steps that they're required to, you know, comply with, and that's all they can do. I mean, yeah. Nobody can turn around and ask for a contractor to prove on their VAT returns that they've included it. That would be unreasonable.
Yeah, quite right.
Yeah.
A question from Anthea. So she's saying if a subby is gross status but obviously still included on your CIS return, would the reverse charge still apply?
Yes.
Yeah.
Yes.
There you go, Anthea.
Yeah, it probably has to be VAT registered. For the reverse charge to apply, you have to be VAT registered and CIS registered. That means essentially they're going to be within the scheme. It's the VAT element that's not going to get paid over. So regardless of whether or not they're standard 20% deduction for CIS or they get paid gross, that's just the amount of deduction that's going to come out of the invoice value. So they'll either receive their £800 or their £1,000 for that invoice, but the £200 output tax on £1,000 invoice, that's still for the contractor to declare on their return.
Okay, yeah, thanks then, Sean. A couple more questions we had actually before this webinar started. I think we've answered Karen's question. Is it possible for a company to go from quarterly VAT returns to monthly returns, thereby reducing the length of time of the cash flow impact? I think the answer to that is yes, isn't it?
Absolutely.
So one of Sean's points there to mitigate the cash flow implications. Sean, another question. What happens if you get it wrong? What are the penalties for this regime?
Okay. Well, we all know HMRC loves a penalty, and no doubt they're going to try and apply penalties to this. But due to this being such a massive change in the industry, they have said that they're going to apply a light touch for the first 6 months. So long as you're acting in good faith and you're trying to apply the rules correctly, any penalties that are imposed will be vacated or will be likely to be vacated. And it also gives you that 6 months just to iron out any problems, because you're going to have 2 VAT quarters, if you quarterly, within that 6 month period to knock out any problems, but also to educate both upstream and downstream in your supply chain to make sure everybody's doing everything correctly. And I think it is more about education of the supply chain more than the onus being on the actual individual companies.
Yeah.
Okay, so it might be a bit of a soft sort of landing period for it, but there's no VAR to check your penalties though, so you've got to be a bit careful, I guess. And we've mentioned software. I mentioned software, Xero, QuickBooks, that sort of thing. How does the system work with MTD software in terms of how making tax digital?
Yeah, again, we touched on it earlier. The software houses have had plenty of time to get their ducks in a row for this one. I know QuickBooks has already got their coding in place, and there's VAT codes there and available to use in QuickBooks Online. It's likely that Xero is going to follow suit very soon, and all the other kind of big boy MTD compliance softwares will pull their socks up and get this sorted soon. If, however, you have any bespoke softwares, I know a lot of people have very tailored software that still enables MTD compliant submissions. Feel free to get in touch with myself and your usual TW contact. We can have a click around in your software to see whether or not those VAT rates are there. If they're not there, we can have a click around and see whether or not we can edit some existing rates to make sure that you can comply with these new rules. If your software still doesn't allow that, at the very least, we can let you know what adjustments you need to make to your VAT returns, so you're at least reporting correctly to HMRC. Okay,
yeah, thanks then, Sean. That brings us to the end, really, I think, of the questions that come in. I would just like to mention Jane Case, who's just put a comment and on yesterday's webinar as well. I think she came to that. Small business working as the main contractor, anything of relevance to us would be great. That's the kind of statement we like, and hopefully we've addressed that.
Everything.
Yeah. What I would say though is, as I bring things to a close, obviously you're bound to have particular questions that apply to your particular business. So feel free to contact us at events@thomaswestcott.co.uk, and then we can forward it to Sean and Annette for their comeback for you. Or if you're a client of TW, your usual TW partner. So I'd like to wrap it up at that point. I'd like to thank our speakers, Annette and Sean. A great presentation. Sorry I did it down in the first instance. I thought it was great. And well done to Sean also for wearing a tie. Next webinar, you'll get a waistcoat like mine. Or not. So thank you all. Thank you both, rather. Thank you for our attendees for watching, and have a great rest of the week. And as I always do with these webinars, I embrace my inner Ron Burgundy. Stay safe, Devon and Somerset. Thank you very much.